It's time for part 2 of the Southern California housing market update. This is the data you're not going to want to miss. We're going to run through the median home prices in Southern California with some surprises in the data. We're going to run through the Altos Research Reports so you can see inventory levels from the national, California down to the county level. And of course, you can enter your own city or zip code to see what's going on. And we're going to talk about the Fannie Mae Home Purchase Sentiment Index. It is the worst time to purchase a home since October of 2011, according to home buyers. And we're going to share an interesting fact about that statistic right there. Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping buyers and sellers make the best data-driven decisions in this crazy housing market. If you're looking for fire and brimstone opinion on the housing market with 50% off houses coming soon, this is not the video for you. But if you want up-to-the-minute data about Southern California housing market, hit that like button and let's get started. And taking a quick look at Fannie Mae's Housing Sentiment Index, you can clearly see that for the month of September, is a lousy time to buy a home, according to buyers. About 19% of buyers say it's a good time to buy. You can see in this chart that the last time we were at this level was actually October of 2011. Taking a quick look, you can see the dip that we had when COVID started. You can see a massive dip, went from about 90 something all the way down to the 60s, and that was due to COVID. But then things got better, and you can see that they actually shifted most recently and started on their biggest drop in February of 2022, which is when interest rates started to shift and have been going up ever since. So while interest rates are going up, home buyer sentiment's going down. Now, the one interesting thing to throw out there is maybe home buyers are wrong. And the reason I would say this is the last time it was this low was October of 2011. And the big turnaround for homes was the spring of 2012. So within a matter of just a few months, the market took off and changed and things got better. So just in a few short months from October 2011 to spring of 2012, things turned around and buyers started buying. We had multiple offers. Market got crazy for many, many years. Just an interesting fact to note. And now jumping into the median home price, first three counties are Orange County, LA, and Riverside. And you can see that things peaked around April and have dropped since then, and that is atypical, like we've discussed in previous videos. Normally that is not the time of year where prices turn, but as you get into the fourth quarter, prices definitely drop there. We're seeing that. We can see Orange County, we have a drop. LA is actually flat and actually went up a little bit, so that's a surprise there, and that's month over month. And then we can see the Riverside is down month over month by about 10,000 for the median home price. The year over year numbers, and this is where we're going to start to see if there are price decreases. We've gone from seeing these numbers here being percentages year over year of 20% in some cases. Orange County is at 7.1% year over year. LA is at 2.6%. And Riverside's at 7.5. So those OC and Riverside numbers at 7%, that's actually still a big number. Really, it should be closer to 3% year over year for home values. LA is at 2.6%, so that's a more typical year over year appreciation. We may start to see these positive year over year numbers turn to negative if the market continues to turn and slow down. And of course, you're going to see it here first. And the other three counties, San Bernardino, Ventura, and San Diego, we have a surprise here. And that surprise is we see that San Diego actually had an increase in the median home price. So it did go up about $11,000. We can see that San Bernardino is flat and Ventura went down a little bit. That is a surprise that we're seeing an increase this time of year for the median home price, and especially with what we're hearing about in the news, that is surprising. And even seeing San Bernardino being flat, and even seeing the fact that Ventura has dropped just a little bit, although Ventura is always marching to their own drummer because there's just fewer sales there. So there are some surprises in the data still. Despite what you're hearing about the entire world falling apart economically, we still had increases in median home price in September. And if you remember in part one, we talked about the fact that the month of September was essentially an entire month of increases in the mortgage interest rate. So looking at the year-over-year numbers, we see a 9% increase in San Bernardino, 3.6% in Ventura, and 7.3% in San Diego. So that Ventura increase year over year is a little closer to where it should be. And San Bernardino 9 and San Diego 7.3. Those are still big numbers. Maybe by the end of the fourth quarter, depending on what happens with the Fed and mortgage interest rates, we may see these numbers shrink and start to go negative, but all bets are off right now while we're still seeing the home price appreciation levels that we are. Don't forget, we're real estate agents as well. If you have any thoughts of selling or buying, want to hear the pros and cons of what's going on in this market, we have a link below so you can reach out to us for a no obligation, no pressure consultation to discuss your real estate needs. Now it's time for the Altos Research Reports numbers, and you'd be crazy not to come here and sign up. You can enter any city or zip code in the nation. Doesn't have to be in California, doesn't have to be Southern California, anywhere, and you can take a look at how those markets are doing. Check out other markets like Boise and Phoenix and Vegas. These are markets that we've heard are taking a hit right now, and you can see where things are. Starting at the national level, then state, and then down to county, we can see at the national level, and I'm going to pull this up for each of the respective places we're going to look at. Inventory is flat, and that is the key to this market, and that'll be the key to price reductions. Demand has dropped, as we've seen in part one. We're getting fewer pending sales, but listings, new listings in particular, have stayed very low, and that's keeping the inventory levels low. We're not getting a big flood of new listings that would be adding to existing inventory, and that is what is reflected. You, of course, can dive in deeper to these numbers if you're subscribed to the Altos Research Reports. Here it is for the national level. You can see the inventory ticked up a tiny bit, but is very flat for the week of October. Moving into the state of California, we saw this big increase in inventory. I was worried at the statewide level. It has leveled off and has decreased. So you can see that inventory is down. Don't forget to look at the Market Action Index meter, and you can see that it's obscured. The blue is this month, the gray is last month, and it's hiding under the black meter line. Well, that means that it's very close. So it could be a tiny bit this way or that way, either slightly less of a seller's market, slightly more. It doesn't matter. Really, what matters is the fact that it's that close so you can't tell. What that shows, and we've come off of doing these videos and showing you that that's continued to become less of a seller's market. It has stabilized month over month, and this is including, because this is cutting edge data, this is data for October 7th actually, this is including and comparing September 7th to October 7th, which is when we had the big increase in interest rates. Despite the fact that we saw a drop in demand and number of people that are applying for mortgages, etc., we're not seeing enough inventory coming where it's going to be shifting the market very significantly to a buyer's market. Now, of course, that's why you're going to use Altos Research Reports, dial in your local area to see if things are different there. Why don't we take a look in the different counties? We can see Orange County inventory is actually down. It was trickling up and then it has since reduced. So that means that things are still stabilized from an inventory level. And you can see the median days on market, that's continued to tick up. But don't forget that that's something that ticks up this time of year anyway. And don't forget that we're still at low levels when you compare it to more normal times. We are getting closer to where things were for median days on market for 2019, which is pre-COVID. But it's easy to forget. That's the way it was selling real estate back in 2019. You saw the home buyer sentiment index numbers for 2019 in this video. That was a normal and good time to buy, and it took that long to sell a piece of property back then. Moving into LA, inventory has stabilized. Again, looking at the Market Action Index, you can see it's almost identical last month. Riverside, again, a broken record, and it's interesting to see that the Southern California counties are so closely mirroring each other. Inventory flat, market action index, same month over month. Same thing, San Bernardino. Ventura has actually continued to have a drop in inventory, and you can see here it's become more of a seller's market in Ventura month over month. You see a little bit of white here. That means it's becoming a better time to sell in Ventura, despite a market where we're hearing everything's falling apart. And then San Diego, inventory dropped, went up a little bit, but it wasn't enough of an increase to the point where it affected the market action index. Point being, so many people get so angry. Oh, market's gonna crash, can't wait, 50%, this, that. But the truth is, it's not in the data yet. Gotta keep tracking the data. Gotta keep watching these videos. We are going to help you make data-driven decisions. We're not gonna get on a soapbox and hem and haw and fire and brimstone about just our opinion on the market. We want to show you actually what is happening in the market. I can't wait to hear from you where you think the housing market is headed. Please let me know in the comments below. Are we about to head into a huge crash? Are we going to continue to skim along like we've been, even with interest rates going through the roof? Make sure you subscribe to the Altos Research Reports. If you haven't, you are absolutely missing out. Those reports come out once a week with your local data. Wherever you sign up for, you're going to get those numbers every week. And as an added bonus, you will be signed up for a free weekly email newsletter. You'll get that once a week so you don't miss the topics that are important to you in this crazy housing market. And speaking of housing market, you're not going to want to miss this next video right here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.